What's going on, guys? This is Nick, CEO and founder of Rival Consultants. Today we're going to be talking about understanding your credit score. It's going to be a brief overview on what you're looking at whenever you log into a Credit Karma, MyFICO, and different, credit monitoring sites. The importance of understanding your credit reports. The choices you make today directly impact your future. Perfect example, you don't pay your bills today, your lights getting cut off tomorrow. It's that simple. Your credit score can influence how much you pay in interest when making a major purchase such as a house or car. So, perfect scenario, you have a 600 and you apply for a credit card, more than likely the interest is going to be 29%. As opposed to if you had a 720 and you apply for a credit card, more than likely the interest is going to be between 10 to 13%. Employers use your credit report to determine whether or not they want to hire you. If they believe a big indication on whether or not you're going to be a good employee is your credit report. A poor credit score can result in higher insurance premiums or the possibility, you might not be able to get insured. Who uses credit reporting agencies? Credit card companies, American Express, Chase, Capital One, Bank of America, banks and credit unions, same thing. The local credit unions, your banks, different places that you can go to get loans, etc. Auto dealerships, same thing. Landlords, look at your credit report to see if you're going to be a good tenant. I have a buddy of mine, he's a landlord. He looks at people's credit report to see if they can even afford to even live at his property. Utility companies, service providers like AT&T, Suddenlink, Comcast, whoever you get internet from, phone service, etc. Potential employers, like we talked about, insurance companies. A lot of times they don't do hard pulls, but believe it, they do soft pulls. I've seen it on Geico. I've seen Aflac do it. Whenever I'm looking to get insurance, even for my business, they'll do a soft pull on me. So, believe it or not, they do it. What is a credit score? A credit score is a number that helps lenders predict how likely an individual is to repay a loan or make payments on time, i.e., your adult report card. They don't care about what grades you had in college. They don't care about none of that. What type of student you are, what type of person you are, they don't care. The only thing they care about is that 3-digit number that comes up whenever you put in your social. Sucks, but that's the way it is. Not really a big fan of it, but hey, you're gonna learn in this group how to leverage it and really how to level up. That's even why I'm doing it. I got a passion for seeing people win. So, anywho, a credit score has a broad use. Your credit past is your credit future. It brings you back to, if you don't pay your bills today, your lights can cut off tomorrow. Same thing, same principle. Your FICO score is the one that the banks use. So whenever you go get an auto loan, mortgage, credit card, the guarantee is going to be your FICO score that's getting pulled. And that ranges between 350 to 850. The worst I've actually seen personally would be, I believe like a 376 was the absolute worst. And you're probably sitting there wondering, what the hell did that person do? No open accounts, no good positive history, all medical bills. Believe it or not. The best I've seen is 800. I'll do a video on that and how you can get there. It takes a lot of time and, but it's well worth it. Vantage score, that would be your Credit Karma. Vantage was actually designed to rival the FICO score. I really don't see it happening anytime soon. It's a good indication to see where you're at. Whenever you log into like Credit Karma, different things like that, it's a good gauge. If you're using Credit Karma, it's actually a good indication, but it'll be like 20 or 30 points off, give or take. So that's why I'm not really a big fan of it, but it's good for credit monitoring. Score range, excellent would be 750 to 850. Good would be 660 to 749. Fair, 620 to 659. Poor would be 350 to 619. The better score you have, it's the more money you save on interest. And that's with everything: cars, credit cards, homes. If you want to buy a boat, different things like that. It's all a numbers game. 620 is the starting approval rate for a home. I have not seen a lender yet who would approve somebody with no less than a 620. No less. They're out there, but I haven't seen it. That 620, you're eligible for like FHA, government housing. It really just gives you the starter options. If you're trying to get a house with zero money down, you probably want to be at the 750 to 800 inch range, because that's trust. Like, they trust you with their life at that point. 680 starting rate for a credit card, personal and business cards. Capital One's a little bit lower than that, but we're trying to get you the best interest rates and the best cards possible. So you want to be at 680 or above. 720 is the best rate for credit. If you have like 800, you're probably at the best possible lending scenario, because they'll look at it, oh, you have 800. Well, you're going to get approved. I wouldn't even put nothing past that. So let's keep it going. What factors determine your credit score? Payment history, amount owed, link to credit history, new credit, types of credit used. Payment history is, let's say you had a Capital One credit card when you were 18, you're 27 now. That's really the amount of all the good payment histories that you had throughout the years. It shows that you're responsible. The amount of debt owed, the money that you owe on that Capital One card, utilization, amount of debt owed, stuff like that, plays a part. Length of credit history, like I said, you were 18, 27 now. All those years you're making good payments, that ties into your credit score. New credit, you had a Capital One card, you said, oh, I want to get a Bank of America credit card. They'll drop your credit age, and that's be adding new lines of credit to your profile, which kind of lowers your scores, but they'll bounce back. But it would lower your average in terms of total accounts. Types of credit used. You want to have a well-rounded credit report. You want to have loans. You want to have credit cards. You want to have an auto loan, mortgage, give or take. They want to see how well-rounded you are. They want to see if you can pay bills in every possible lending scenario there is. That simple. Best practices, rule of thumb: keep your balances, i.e. credit utilization, 30% or less. Me personally, I would say 10%, or just pay everything off in terms of your credit cards. Keep amounts low on revolving accounts. That plays a huge part. If you have a 700, you max out a credit card, that'll put you right back in the sixes, possibly at the 660 or 650 range. Seen it happen. Pay off debt rather than move it around. The only scenario that I would recommend moving debt around is if you have a credit card and you're paying, let's say, 29%, and you apply for the Discover card, which has a 0% APR for 15 months, and you do a balance transfer to go ahead and start working on paying that balance down without paying the interest. That's the only scenario that I would recommend. Works for personal and business, but talk about business later. Don't open a number of new credit cards you don't need. Trying to go on a trip, don't apply for a bunch of credit cards and max those cards out. Trying to go to Cancun, trying to be big baller. If you don't need it, don't get it. If you don't have a goal in mind, don't get it. Time in the bureau, link to credit history, plays a huge part. Don't open a whole bunch of new accounts, because that would drop your credit age. You're trying to get a house, don't get a car first. That'll mess up your debt to income ratio, and you won't get a house. It's seen it happen, and it sucks. New credit, that plays 10% of your overall score, plays a huge part. Reestablish your credit history. You've had a bad past, you had bad credit, you had to get your credit fixed. You get secured card, not really a big fan. Only a couple banks that I recommend, maybe Federal and Capital One, or possibly Discover, cards that you can actually grow into and get higher limits and get them upgraded to unsecured. I would recommend my jewelers first, being at $5,000 compared to $500. They won't really be able to tell if you had bad credit, because if you have a secure card starting out with that limit with a certain bank, that's a huge indication, if someone's doing a manual underwriting, that this person had bad credit and they just want your credit repair. A little bit of game I just gave you there, so keep that in mind. FICO score is distinguished between searches for a single loan and searches for new credit. So you go in a bank, they're pulling your FICO. That's the only score they really care about. Credit used, you want to keep it at 10%. Keep your credit cards low. Manage credit cards responsibly. Just be responsible with your personal credit, and really your bills. It all ties in together. Closing an account does not make it go away. So if you owe Bank of America $500, you closing that account, it's gonna hurt you. It's gonna be late pays, collections, charge-offs. It's not gonna be pretty, and I guarantee you, it's not going away no time soon. Unless you hire me to do it, then it'll probably be going next month. Just saying, no rush. Effects of a 680 score as opposed to a 780. A maxed out credit card will be 10 to 30%. Or if you have a 680, 780, 25 to 45%. So you kind of see where I'm going with them. Going with this one, I'm saying don't max out cards, pay your bills. It all ties in together. One late pay will drop you down 60 to 80 points. You have a 680, best believe you're finna be in the 500s. You have a 780, you're gonna be in the 600s. Go to a debt settlement, it's up there. As the situation gets worse, the more points are getting taken away from you. Foreclosure and a bankruptcy is the absolute worst case scenarios. You can bounce back from those, you can get those removed, but those are gonna hit. It's like getting punched in the gut from Mike Tyson or like Ronda Rousey or somebody. It's not gonna be pretty. You can bounce back, but it's gonna be a minute. Tips on how to improve your credit: pay your bills on time. Paying off collections will not help your credit score whatsoever. Can't stress that enough either. Just because you pay it off, it's not gonna hurt you. It's not gonna help you. It's still gonna show a collection, although it will be zero. Don't expect nobody to freaking even like that. I hate to say it, but it won't help you. If you're gonna do that, ask for a pay for deletion letter, negotiate the price, and pay it off. Adding AU Tradelines. I love AUs. Those tie together with funding, etc. If you have a parent, cousin, brother, sister, nephew, little cousin, whoever, and they have a good payment history on their credit cards with a low utilization, try to ask them, if they can add you on your onto their credit card to get that payment history and boost your score up. And a secure card or my jewelers, getting a secure loan from like Self-Lender and different places like that, or your local credit union is really good too. These are sites where you can get your credit report from: Experian, TransUnion, Equifax. You want to get your credit report for free, you can go to annualcreditreport.com. But the ones that I recommend are MyFICO and Credit Check Total. And they'll pull all three, and they're really a great indication, and also good for credit monitoring as well. Alright guys, that's the end of this. Be on the lookout for the next one. I'll be talking more in depth about business stuff, answering questions, really putting you guys on some real game on how you can level up your credit, get money for your business. Really just live the good life and don't have the fear of not being able to get a job, apartment, car. Really be able to walk in and to the bank on a first name basis, talk to the banker. I guarantee you, with good credit, they're gonna know your name. I promise you, they will love you and they want you to use all their products. So anyway guys, like, share, comments, subscribe to this YouTube channel, because I'll be dropping a whole lot more game that a lot of people don't even want to talk about. They might talk about it a little bit, but we're gonna go into the depth about it. I'm really gonna show you guys how to level up. I'm tired of you guys getting scammed and giving a run around. So anyway, go ahead and end this one, guys. I'm gonna talk to you later. Like I said, like, share, subscribe, and have a good one.